Welcome to our employment tax update for July 2024. This month we'll cover recent developments in fringe benefits tax, superannuation guarantee, contractors and payroll tax. Let's dive into the key updates and their implications for your business. In an interesting case, BQKD v FCFT, the AAT found that directors were not employees for fringe benefits tax purposes. The tribunal overturned tax assessments on non-cash benefits given to directors, siding with the taxpayer. The case involved a family trust corporate trustee where directors were also beneficiaries. There were no written employment contracts or board decisions, leading to the conclusion that the directors were not employees. The key questions at issue before the AAT was whether the three directors were employees of the taxpayer for FBT purposes, and if they were employees, were the benefits paid to them in respect of that employment. The AAT concluded there was insufficient evidence of control and integration into the taxpayer hierarchy. Even if an employment relationship existed, the benefits were not related to employment but to their status as beneficiaries. Big news in relation to contractors, as the ATO draft guidance on the extended definition of employee for superannuation guarantee was released. The draft ruling seeks to provide consolidated guidance on the meaning of employee by expanding upon the ATO's existing views on the common law interpretation of employee and providing guidance on the extended meaning of employee for superannuation guarantee purposes. Of note is that superannuation guarantee ruling SGR 2005/1 is now withdrawn. The new guidance clarifies when a contract is wholly or principally for the labour of the person, reflecting the three elements set out in the Dental Corporation PD Limited v Moffat decision. These three elements are that: firstly, there must be a contract. Secondly, the contract must be wholly or principally for the labour of a person. And thirdly, the person must work under that contract. It also incorporates key principles related to results and the right to delegate from the full federal court decision NJMC Proprietary Limited v Commissioner of Taxation. Finally, an often forgotten element of the extended employee definition relates to entertainers, artists, musicians, and sportspersons. Specifically, there is expanded guidance in relation to these cohorts as it clarifies that payments to such persons are to be separately examined, with particular attention given to whether a payment is being made to a worker in connection with the aforementioned activities. From a payroll tax perspective, we saw that Revenue New South Wales now require additional details and validations from employers as part of the new annual payroll tax return process. The new details and validations will require employers to answer a series of additional questions that delve into various aspects of payroll tax components, with a particular focus on what is not included in the payroll tax return or where there are material movements year on year. These questions will cover contractor arrangements, employment agency arrangements, and year-to-year variations. The ACT state budget was delivered and noted that the payroll tax surcharge for large national and multinational businesses operating in the ACT will be brought forward by 1 year to 2024 to 25, and the surcharge will be increased in 2025 to 26. The Queensland budget announced an extension of the apprentice and trainee rebate. The 50% payroll tax rebate for wages paid to apprentices and trainees will be extended for 12 months until the 30th of June 2025. We also saw changes to regional payroll tax discount. Currently, a 1% discount on the payroll tax rate applies to regional employers that had an ABN registered business address in regional Queensland and at least 85% of their taxable wages paid to employees located outside southeast Queensland. This measure applies until the 30th of June 2030. However, from 2024 to 25, the regional discount eligibility criteria will exclude extremely large businesses. That is, businesses that pay Queensland taxable wages of more than $350 million on an annual basis will not be eligible for the discount. Reflecting on these updates, I think the draft ruling for contractors is really significant. There is currently a difference in approach from an employment tax to that of an employment law perspective, which is causing a lot of confusion and angst for our clients. We are seeing an added focus on contractor arrangements in due diligence projects, audit activity, and payroll tax, evident from the updates to disclosure requirements in New South Wales. Whilst the FBT case was an interesting read, I'm not sure this will impact a large number of taxpayer arrangements. Thank you for joining our employment tax update for July 2024. Should you have any queries in relation to this update, please feel free to connect with your local RSM contact, being myself and Jane in Melbourne, Gina and Neve in Perth, and Jason in Sydney.